Welcome to Wall Street Moment. I'm Yu Chao at Wall Street, New York Stock Exchange. To take a look at today's commodity market for crude oil, apart from dollar dynamics as well as geopolitical, emotional, and other secondary factors, the main driving force of the oil market, like any other commodity market, is the expected dynamics of the supply and demand balance. And also, I suggest you look at the short-term oil market prospects through the prism of the forces provided by OPEC, the International Energy Agency, the IEA, and the U.S. Energy Information Administration. I believe that the combined vector of these three different projections deserves more credibility than each of them separately. Today, to get a further look at OPEC first. Based on the last OPEC's report and assuming that OPEC oil production this year will remain at level of the Q4 2017, we obtained the following expected picture of the global oil market balance. As you can see, after the deficit observed from Q2 to Q4 2017, a surplus is very likely in the world oil market in the next 2 quarters. It again will be followed by a deficit, but do not forget that this deficit will precede the probable cancellation of the agreement of limiting the oil production. So its impact on the oil market will not be strong. And in addition, there is a possibility that the mentioned agreement will not survive until the end of 2018. So whatever the case may be, according to the OPEC's prediction, there will be no deficit in the oil market in the next 2 quarters. And next, let's move to the International Energy Agency, the IEA. To build a similar graph of supply and demand of the global oil market based on the latest IEA forecast, you might see that the situation is even more negative than the one we forecasted by the OPEC. So according to the IEA, a steady oil surplus is expected in the first half of the current year, and there will be no deficit in the second half of the year. So in order for the oil prices to continue growing or at least steadily remain at the current level, there should be a deficit in the market, but this is not likely to happen at least the next 2 quarters, and possibly even longer. So the opinion on the street probably to get ready to sell short. Well, we also invite our CME guest today to get further info and analysis. According to the OPEC, the period of the deficits in the oil market has ended. And how do you read the OPEC actions and foresee their next moves?
I don't see that the period has ended. I think they're saying that the rebalancing is well underway and will complete. But in the last meeting, they did say that they were looking at 2019. I think they're pretty happy with the price levels, which is interesting. It seems to me they may have thrown in the towel in terms of defeating U.S. shale and are just trying to maximize profits at this stage for as long as they can. We've seen unprecedented cooperation in the production cut. There hasn't been as much cheating in the last 3 months as there were the previous 12 months of the year of the initial agreement. So I think they're doing very well in what they wanted to do. It's just we're also seeing unprecedented hedging. So it's only a matter of time before the U.S. shale production starts to overwhelm the demand.
Then how do you see the supply and demand of the oil market balance picture?
Well, I think what we have is a short-term bullish case for crude oil and a long to medium-term bearish case. We're seeing, as I mentioned, record hedging from some of the producers with backwardation in the curve, which is the normal stance of the crude oil curve. That means there's been good demand and that supply will fill that demand up. OPEC picked a good time to extend that production cut because demand hadn't really kept up with the lower levels of production OPEC put out about 16 months ago. But now the demand has crept up and OPEC kept those production cuts in place. And shale, while building, has been slower than most people thought to come online. Not than I thought, but than most people thought. Again, we had the largest jump in rig counts on Friday that we've seen in a few weeks, but again, they're starting to get more oil out of each well. So over time, there's no doubt in my mind that crude oil has to go lower, but short term, you're probably looking at $68 to $70 for WTI without much strain.
Next, also to take a look at gold market. We have seen massive rebound in gold. A part of that is demand remains strong. So how do you see the demand side currently and your outlook in the near future?
The demand side has remained strong. Usually we get a bit of a spike around July and August and that tapers off. We didn't really get that taper this year. The physical demand for gold has been good. It's consistent with a stronger global economy as all metals really get a bid to them. We've seen it in the base metals as well. And going forward, I don't really see that winding down, although we will get State of the Union address. So the metals do correlate, although gold doesn't correlate as strongly to base metals as it does to silver. But with the State of the Union address, if there's any positive comments about an infrastructure plan, you could see the whole metal sector get a little bit of a bump up from that. In addition, the dollar's been weaker, helping all commodities, and we haven't really seen a turnaround in that. So gold getting a lot of its demand, both on the ETF side, the future side, and the physical metal side.
Well, it's important for traders and investors to clarity in relation to the dollar trend after mixed comments from the U.S. President and the U.S. Treasury Secretary. So what's your outlook this week? Will gold continue to move higher? And what's your near-term target?
I think it will, and I think 1380 is where we're looking for gold to get to. I think the dollar's going to continue lower, and as I mentioned, lower dollar is good for metals specifically and commodities in general. And again, as the dollar weakens, unless the Fed does something to adjust that course, I think in the State of the Union address, President Trump will try and talk about a strong dollar, and he won't succeed. The dollar will weaken when that's over.
Thank you. My personal WeChat account is now available to all of you. Please follow me and let's chat.